Your continued support of the CoinSeries channel is much appreciated. Request from viewer is, who is your favorite CEO and who is the best coin for you? You can also comment your opinion. Thank you to all the subscribers of our CoinSeries. Who came to our channel CoinSeries? You will always be info with the latest CoinSeries news. Number 1, CEO Brad Garlinghouse XRP and Ripple. Number 2, CEO Grayscale SEC. Number 3, CEO JP Morgan Bitcoin. Number 4, CEO Brian Armstrong Coinbase. Please like my video and subscribe my channel. Having said that, I pray this reaches you in good health, no matter where you are. A paradigm change has been going on in international finance for a while now. Nothing much has changed, even though it has taken some time, and it is frustrating to learn about these things happening. Fortunately, all of your worries will be put to rest in this video. Let me begin by saying hello, and thank you for taking the time to read my most recent essay on the topic of X. It will go over a lot of ground to demonstrate how the new system is being put into place and what's going on behind the scenes. The briefness of my communication is my apologies. In my opinion, this is the actuality that is playing out before our eyes. This has been going on since at least 2008, as far as I can tell. It is quite unlikely that we ever totally recovered. That is why the current system must be dismantled. In my view, after destroying the system, they continued to operate the monopoly game as if nothing had happened. This isn't just my opinion. Harry Dent Jr., who wrote an excellent article about inside the money trading, put this out. He continues by saying that the boom of the 1980s will still be around. In reality, all it's about is bringing an end to the 2009 bubble, which was a period of artificially inflated prices rather than natural expansion. I completely agree, once again. In my opinion, the entire global monetary system is covered in the film's topic of real estate. Actually, bubbles aren't useful for much of anything. At the first market bubble burst in 2000, the Nasdaq dropped 78 points. During a boom, stock prices were anticipated to stay high for an extended period of time. That being said, my signal this time around indicated that the S&P 500 would fall by 86 points, returning it to its bottom from early 2009. This kind of stock market boom has happened before, in the early 1980s. The fabricated euphoria that began in 2009, a year that did not even coincide with the time of natural expansion, is already starting to burst. What he said might be seen there. To return to its 2009 level, it must decline by the 90s, and we will likely not stop there. The ordinary person will be completely destroyed by this action, but it will take place there. This is being done on purpose, because they want it to happen. The bubble burst in 2009, in case you were wondering. Are you kidding me? Beyond their CPI, the bank's success is heavily dependent on how much they try to influence our attitudes. While the typical person was financially crushed, they grew affluent. Just like Kavya said, a massive shot. Inflation is significantly higher than the current CPI of 3.4% in many basic necessities, such as vehicle insurance, 20.3%, transportation, 10.1%, auto maintenance, 7.1%, rent, 6.5%, homeownership, 6.5%, free healthcare, 5.3%, and distance from home, by victory. Since February 2020, neither the core nor the headline CPI-CBI have been hotter than expected. Both values were expected to be lower. No matter what, the markets will always believe the Federal Reserve's narrative of changing course. Even yet, affordability is continuously going downhill. 4 of the dips have already been purchased. Yields on 10-year notes and stock prices both fell on the same day. Personally, I'd be surprised if the Fed didn't make a change in March. But we must remain very careful and watchful. These are peculiar and unsettled times in which we find ourselves. Anything can happen at any moment. In light of everything that is weighing on us at the moment, I believe it is critical that we maintain mental clarity. Many of these products, including cryptocurrency stocks, will experience that massive surge in value, but then max pain will hit. After then, the new system will be rolled out. In case you were wondering, it's already happening in Zero Hedge and all around the world. Do you think I'm crazy? I thought these posts were made 10 days ago? I see your point. 2 years after hitting 30 trillion and 4 years after 34 trillion, we struck 34 billion.00 on January 2nd, followed by 33 billion.000 3 months later. According to our observations since approximately September, the rate is increasing exponentially and will reach 34.059 billion.00 by June. In all seriousness, this just cannot go on. Central bankers like the Federal Reserve are deliberately trying to restore 2% inflation, and as a result, they are devouring your wealth. Why? I just don't get it. Is it possible to pinpoint the individuals plotting your downfall at the hands of the EU so that they can annually treble your investment? It's as if they're sitting on a treasure trove of cash. Even though it appears like we've hit rock bottom, this monopolistic system is actually a farce and will eventually collapse. However, the main issue is that this will be an extremely difficult moment. It seems to me that these people are really going out of their way to buy the newest and trendiest stuff, and I'm sure you all can relate. When all other options have been exhausted, investing remains the only viable option for those with limited financial resources. When diversifying your assets into cryptocurrency products, gold, and silver, this becomes very important. Their money is being frivolously spent. Those individuals will be eliminated in an undeniable manner. You need to be prepared for a black swan event because something similar happened in 2008. And that's why that last gigantic bubble burst, too. From what I can see, it seems like we're preparing for this. Now that we've made a U-turn, many people believe things are looking up. Also, recall what I stated earlier? When things are going well, getting out is enjoyable, but when things are bad, getting in is a living nightmare. This is how banks operate. Instead of going out and getting one themselves, they'd rather lend it to you when the time isn't right. When that day comes, they will absolutely not give you any money. Due to its importance, this is a word I use often. Having cash on hand is absolutely necessary in such a situation. Already, it's very heavy, isn't it? Here we have the total national debt divided by GDP, my friends. We're at an absolutely ridiculous 120%. To put it plainly, this allows us to state with certainty that a horrific occurrence is about to take place. A system reset will be necessary for the implementation of permission-based distributed ledger technology, DLT, that CBDCs. Rest assured, I am being truthful. Since the World Bank and other prominent central bankers took power, this has been going on. The current financial system is already overwhelmed, and a massive collapse is unavoidable. Things began to break again in the months of March and April of 2023, following the collapse of financial institutions. In case you were wondering, the Democrats are the ones behind this. Even if the fiat system is being created out of thin air, they are making enormous progress in this field. All will be restored to normal once a Republican assumes office. In fact, we feel the effects of both sides' actions. The brightest minds become caught up in politics, which serves no one's interests in the long run, as I have constantly argued. To further divide communities, they are using this as a weapon. Despite doing nothing to help the people, these politicians have accumulated great riches. They are unable to return to our way of life due to their literacy issues. They don't understand it. In light of Silva's latest essay on Wall Street, the government's spending has become unmanageable. They are using deceptive tactics to make it appear as though they are reducing expenses. In reality, though, they're going full bore ahead, with annual deficits exceeding $2 trillion and a projected increase in the national debt to $37 trillion by year's end. A part is being played by each party. The Republican Party opted to spend a record $50,000 per home in 2023 rather than demand that Congress reduce its wasteful spending. Leadership is once again postponing addressing the issue, despite claims that savings have been made. If you remember, Janet Yellen said that the Federal Reserve may print up to $50 trillion in new money. Now that we've reached the three-quarter mark, she claims that by 2030 this will be finished. As she went on, she assured everyone that they should remain completely calm. They interrogated her to an extreme degree. Does this have a chance of continuing, in your opinion? They are well aware that everything is an elaborate fake. So it's as if they've stumbled into a fantastical realm. It is all meaningless. On top of that, they have prior knowledge that a replacement system is in the works. What makes it even stranger is that the Federal Reserve has admitted a $114 billion loss for the previous year. Lost funds from commercial banks being paid to hold them in the U.S. Federal Reserve's reverse repo reserves alone amount to that much. The unrealized bond losses, which can reach another trillion or more, are not factored into that number. Naturally, the portfolio will not lead the Fed to declare bankruptcy. Simply stopping payments of profits to the U.S. Treasury will cause it to shift its losses into taxpayer losses. Watch this video that Peter Stain-Jover posted to YouTube. The Fed comes out on top once again. Keep in mind that the Federal Reserve lost $114 billion in only 1 year, which is its largest loss ever. Among all U.S. bankruptcies, this one would be the third worst. If you want to know who will have to pay the extra trillions in unrealized losses, you and your descendants, watch this video. About 3.5 minutes is the runtime. On top of that, it gives you all the details you need about the Federal Reserve. In addition to the reality of the matter. No need to panic, the Federal Reserve has only just revealed its largest ever loss. The preliminary 2023 financial statement was released a few days ago by the Federal Reserve, as you mentioned. No audit was conducted to arrive at these results. We should take the Federal Reserve at its word when it says something is amiss. Remember how Ron Paul tried for decades to get the Federal Reserve audited? Well, the Fed is an unlawful corporation that doesn't answer to anyone, so his efforts were ultimately unsuccessful. According to Murray Rothbard, the Federal Reserve is even less regulated than the Central Intelligence Agency, CIA. So be it. After evaluating its own assignments this year, the Federal Reserve revealed a $114 billion operational deficit. Just to give you an idea, the worst bankruptcies in U.S. history have been Washington Mutual in 2008 and, interestingly Life and Brothers. Whatever the case may be, the losses were contained to that particular year. There were yet countless other billions. The printing of trillions of dollars to finance COVID lockdowns and subsequent purchase of bonds, mostly government debt, has caused the Federal Reserve to incur significant losses. They lose some of this money because they pay Wall Street to keep their money in the Federal Reserve. They do this to hide inflation and because they like giving money to Wall Street. The Federal Reserve's $9 trillion in bond assets started losing money at a scary pace as prices fell and interest rates were rapidly hiked to contain inflation. It is estimated that the Federal Reserve has lost more than $1 trillion in unrealized losses, which are funds that have not been repaid. Unrealized losses will remain hidden until the bonds are sold by the Federal Reserve, which can happen at maturity or at some other point. Consequently, bond maturities are usually 90 days or 5 years. These were pawned because the Federal Reserve attempted to absorb overvalued currency through quantitative tightening. The 114 from last year was a hybrid of the two, and we still have $1 trillion or more to go. This has no bearing on the immediate future. Taxpayers get to keep whatever money the Federal Reserve keeps, but if things get bad, it can always print more money, which leads to inflation. Why? Reason being, the losses completely eliminated the annual funding the Fed was supposed to provide to the Treasury. These are known as remittances from the Federal Reserve. One way of looking at this is as a form of licensing charge for counterfeiting. These are the profits made from printing and lending money. Federal remittances, which were previously $80 billion each year, may now be lost for decades. No losses were ever recorded by the Fed up until 2022. Until our children reach adulthood, it will continue to incur losses. Unchained message, B has obviously had an effect on your emotions at this point. Accordingly, the future. Perhaps you're wondering, well, how does Ripple factor into all this? And, furthermore, what is the role of XRP? Here, what is XRP's function? Seems very easy, doesn't it? What exactly is quite insane? Here we are seeing some of the biggest holders in the world, so I know we're dealing with the real deal. We are not talking about those tiny tier retail magnates who are worth billions of dollars. The common man is not our target, contrary to common assumption. Instead, we are speaking to the strong and rich individuals like Larry Fink who run thriving investment firms like BlackRock. According to the post on XRP Daily, the new system's biggest holders are the really rich. While they switch out the old system for the new one, make sure you keep an eye on them. Check this out. You root against someone's success when you're trying to rob them of their money. First, you put them through immense economic hardship. So that people don't become involved with the corporatocracy, who produced the token and will be major players in the bull market that's bound to happen. The world's wealthiest people, the trillionaires, will not drop to 10 million simply because they are the main holders of the debt they moved to the new system and the debt markets are collapsing. Inflating it will be done simultaneously with deflating it. Consequently, they will experience absolute dominance and a corresponding increase in their wealth. We shall serve them a larger hollowed-out center as the final result. Due to low incomes, the majority of the population will miss out on the crypto bull market. Their fortunes have plummeted due to the aforementioned rising interest rates. For example, if we examine current events more closely, we might see both new and long-standing important players in the Bitcoin industry. For what seems like an endless amount of time, JP Morgan has made use of Onyx, a private blockchain platform. They advise people to stay away from cryptocurrency because it's useless. Their presence makes it impossible to proceed. The NV are not unfamiliar with blockchain or distributed ledger technologies. Central bankers like Christine Lagarde are well versed in the field and adept at staying current with technical developments. Can you honestly say that you don't think this is happening by chance? Debt levels in the previous financial system have reached inconceivably high levels, the pressure cooker is in place, and now all we can do is wait for the lid to come off. This long-term, unsustainable plan to artificially inflate the present system to artificially inflate the future system will cause havoc on the old system, and that is exactly what will happen. Lots of money is being printed by the government, which is causing its value to rise. Despite their assurances to the contrary, they are dishonestly giving us false information on CPI and claiming that everything is good. It is completely unknown in the retail industry. This is because of all these news items that have gone viral. Their attention is now elsewhere. We must determine who will succeed Kim Kardashian. That being said, I sincerely hope that everyone found this video entertaining. To demonstrate your gratitude, kindly subscribe to notifications and, if you have already done so, leave a like. Until we meet again, goodbye.